Hey everyone, welcome to another episode of the Adventures of a Real Estate Investor. I'm Susie.
And I'm Michael, and we're excited you joined us for this adventure.
So today we have a dynamic duo with us, and we are super, super excited. So thank you so much for joining us today, Jimmy and Brian. We are so excited to have you.
Well,
Thanks for
thank you
having
for
us.
having us.
Absolutely. So we had a lot of fun chatting before the show, but obviously our adventurous family doesn't know a lot about you. Would you mind sharing a little bit about your background, like why you guys started investing in real estate?
Absolutely. I think again, I'm the CEO of the Cloud Castles, which is a investment platform for vacation homes. And we think the best blends of real estate is vacationing and then as well as owning the house, the vacation. And then when you're not there, renting it out to actually get a passive income. So we try to take the best of both worlds there. We got started, well, let Jimmy speak to how we got started, but maybe he can give a quick introduction himself.
Yeah, so I'm the CEO, co-founder of Cloud Castles, and it's been a fun ride for the last 2 years since we started back in early 2020 when we launched Cloud Castles. But Brian and I go back to college, so we've known each other since we both taught a student-led class at UC Berkeley. So I don't want to age ourselves, but we've known each other for a very long time.
So where did the itch for real estate come in?
Well, for myself, I grew up working construction projects. It was something that just make a few bucks as like a teenager. And it was really just so rewarding to kind of see a house really be built and taken from the ground up or see a room renovated or a deck remade. And then with that, I'm just a huge travel fan. So I just love traveling. I'm trying to get to all 6 continents next year. I'm already at 4, so I got 2 more to go. And with that, passive income is just a great way to kind of really enable you to travel and also have the ability to get that passive income and just stay in wonderful places. And so I try to own in different locations and stay at those places and leverage them.
Yeah, for me, and this probably won't be the first time you guys hear this, but Rich Dad Poor Dad was the book that really took me along this real estate journey. Yeah, way back in the day when it first came out, I was one of the first people that stumbled across it while I was in college. And at the same time, Brian and I, we met in college and we used to travel to a lot of different places. So we would bring big groups together. And always in the back of our mind, we were thinking, what if we actually owned this short-term rental? Airbnb wasn't a big thing at the time, but what if we owned this instead of just paying somebody else for it? So it took a couple of years. Of course, we had to get out into the real world and start making our own way. But we eventually came back around and said, I think this is the time that we can build a business to help others get into the real estate space, just like we wanted to do all those years ago. And that's how Cloud Castles was born.
I love that. I love that. Yeah, that's awesome. Would you mind just sharing with our audience like a little bit more like in depth about like Cloud Castle and like what kind of services it provides, I guess?
Yeah, absolutely, Michael. We have a few different offerings, but at the end of the day, it allows folks to enable or own real estate really anywhere for an incredibly low amount of money. So we basically do solely vacation rentals, and it's basically the buy versus rent mentality. Like it's always better to buy if you can. So what we encourage or we have our customers do is basically own the real estate that they're vacationing at. So that not only are they having a great experience at the vacation home, but that vacation home, once they leave, is actually paying them money back every month. So how it works, we'll go in with investors and we'll buy a property, we'll renovate the property, we'll put it on short-term rental sites like Airbnb, VRBO, Booking.com, and then they get to stay at the property for a huge discount. And then every single month, when it makes a profit, they get paid out their proportion of their equity. So for example, if they own 10% of the initial offering, they'll get 10% of the profits every single month and not really do any of the work. And we think that's a great way to, we try to leave all the fun in real estate investing and have us do kind of the hard work. So we have a bunch of properties in about 5 different states now, or 4 or 5 different states. And yeah, it's been a great experience working on it.
That's awesome. So it sounds like what it is like you bring in a bunch of like, passive investors, basically capital partners. We're going to come in, maybe, I don't know, 1 person, 2 people, 3 people, whatever, however many it takes to like purchase the home. I'm assuming you're getting like leverage on the house as well, right? And basically what you're doing is offering them a place to stay at a discounted price, but also giving share of the profits in the back end. And then what you're doing is like, you're handling all, if it needs to be rehab, whatever, you're handling all the rehab, you're handling the day-to-day, like property management or short-term rental management, basically, of that, and they basically don't do anything, correct?
Yes,
Yeah, I mean
exactly.
that's the dream, right? You get to invest and then you don't have to be hands-on. So we kind of try and make that easy for people to get into this space and have less risk. That's the goal behind Cloud Castles is less work, less risk, and If it works out, then great. You can keep investing with us.
And do you do sorry, I have a bunch of questions. Do you do like one property at a time, or do you raise money and then buy like
A
a portfolio of properties?
So right now we're doing one at a time, and that's simply because just the users that we work with kind of all want to focus. We just grab folks who want to focus in like one particular market. But in the future, as we scale, we'll absolutely go after more of a portfolio or multifamily kind of approach. Yeah, and so we do everything from the acquisition. We're pretty sophisticated as far as which properties we choose. We try to use machine learning and a pretty good model of deciding which areas to invest in, how many rooms they should have, what kind of amenities are super important. So we kind of put that all together and then give that as a packaged offering to our user. And also sometimes folks are just like, I want to own in Tampa. And we're like, okay, let's go own in Tampa. And then we go out and get a house done and renovate it. And we have a great team there that does all the work and really makes it pop on the pictures. And we can speak to how to actually make a ton of money on Airbnb and you can absolutely lose your shirt if you do Airbnb wrong, or if you can make a ton of money if you do it right. So we walk the folks through that whole process if they're interested and kind of show them the ropes.
It's awesome. And I'm assuming each one is like set up like basically a joint venture, a JV, where you have just one LLC and a bunch of people who are coming together to provide capital.
Yeah,
exactly.
Gotcha.
and it's not just up front. Just to double back on that point. So we have people that come throughout the phase of a property. So some people want to be first money in and get the best return. And then some people want to wait until the Airbnb is live to see that this is an actual project. And for us, we meet you where you're at. So we work with people at any stage that they want to potentially invest in one of the properties.
So how does that work if they want to come in later then? Like, does Cloud Castle own part of that and then you sell like shares, if you will? So you'll have a bigger ownership percentage and then you'll share that or sell those off.
That's right.
Together. Okay. Gotcha.
Exactly. It's all through our app actually. So they can buy both the shares property and they can also get paid out every month via the app.
That's cool.
What will it take for you to move into new markets?
Just one investor who wants to work with us. Moving to new markets, our plan is to go internationally as well. We are pretty selective upon which markets we go to because Airbnb or short-term rental laws are pretty stringent. So you want to be strategic about which markets you go into. And there are markets that just inherently are more profitable than others. So we try to be kind of like guiding hand as far as which markets we'd recommend and really work with the users to get there. But as far as going new there's basically two kind of approaches to short-term rentals. Either you can go deep in a market. So you only go and you buy just houses like in one neighborhood that you really like or throughout this one city, or our approach is rather really to go wide. So we actually try to go as many different cities. And the reason why is because we want to de-risk our investors. So as opposed to, you might want to start your own Airbnb, you might have $200,000 to get it going. Great. You get it going, you're in one market, but then a hurricane comes like Hurricane Ian, or there's a fire.
Yep.
And so you're putting yourself into a position of considerable risk if you go deep in a market, in our opinion. So we try to go really wide. And folks, sometimes they'll come to us and they'll be like, I have 50,000, 100,000 to invest. And they're like, I want to do it in this market. We say, hey, why don't you do this? Why don't you put just like 10 or 20 in that market because you like it, and then kind of split the difference across all these other geos. And that way you can really de-risk yourself. You can really make sure that if the market tanks or if there's litigation changing in that specific market, you're not really exposed as much. So we try to really, we want ourselves and our investors to be as de-risked as possible.
It totally makes sense. So follow up on that is like, I'm just thinking about like the JV arrangement and you getting leverage on the property. Like, how does that work with like residential mortgages and then having investors as well? Like, would you get like commercial mortgages, or I'm just curious. Like, I've never thought about like other people bringing in money for the down payment, if you will.
Yeah. So typically we do get commercial mortgages. And for the audience that's not familiar with DSCR loans, it's a debt service coverage ratio loan that's just based on the income that the potential that the property has versus your debt to income ratio. So what we do is when we go out and find a property, we look at the revenue potential. There are public facing sites like AirDNA and Rabu, and we can take that to the underwriter of the loan and say, look at how much this property can make on Airbnb and the like versus whatever the mortgage is going to be. And then that's how they underwrite the loan. So it's, again, back to de-risking. It's less risky than trying to have one key investor or us having to put their income or their credit at risk for every single application. And it's also less risky overall for everybody involved if we have a very turnkey process to getting a new mortgage off the ground. So it's been a little bit harder because of some of the things going on in the real estate industry, but still, if you can find a property that has good bones and has the revenue to cover the debt, then it makes it a lot easier to get a loan for the short-term rental market.
Interesting.
How has like the loan structure changed, like just with the current economy in the last 6 months? Has it been much more difficult, or what are you seeing? Or is it still like if the property and the numbers work, then you just date the rate until you can like refinance or get something different?
Yeah, I can answer that. So it's definitely gotten harder, and what I mean by that is the lenders 2 years ago that were in this space, some of them have been wiped out. So we have seen that happen firsthand, and then the ones that are still left have had more stringent requirement, which usually means a higher down payment and a higher interest rate. But to your point, Susie, even with a higher down payment and a higher interest rate, if the numbers work, the numbers work. So we try to be confident in our modeling that Brian talked about earlier. And if we see that even with this debt that we're going to have on the property, if we can make the numbers work, and we usually try to shoot for double-digit returns, then we go out and do a deal.
Yeah, I think, like the past 2 years have just been like if you got into real estate during that time, it was amazing. But
Mhm.
now, I mean, like we're just going back to rates that to what they were before. It's not like this is all brand new. They're the highest that they've ever been. And so it is nice to hear, even when people say like you should continue to invest in real estate if the numbers work, because there is so much more. And when I say wealth, I mean like generational wealth, time wealth, whatever wealth means to you to be had through real estate. And like I said, like you marry the property and you date the rate. And so with that mentality, you can find a lot more. And like we
I
also
like
have
that.
these expectations that our return should be so high. But again, like if you look 3 years ago, like the returns might be where they were then. And so it's just because real estate is such a long game, right? Like there will be great years like it was for the past two, and it'll just go up and down and up and down over and over and over again. But you have to be a part of it for a majority of the time for you to really get that great success.
Yeah, and just to
100%.
add on that, or just add some more questions about the loan structure and stuff like that for short-term rentals. It's cool to know that like there's actually lenders out there that are actually looking at the potential income generation from the property, because like 2 years ago now, almost 2 years ago, maybe a year and a half ago, we had like a 8 unit that we like converted, like multifamily 8 unit that we converted to short-term rentals, and we couldn't get like a actual loan against a short-term rental. It had to be like what each unit would bring in if it was like a long-term rental.
Yeah, yeah, we've come across that sometimes.
So have you seen more and more lenders coming into the space now, like actually giving loans for short-term rentals?
Well, we saw it initially at the top of 2021. So there was this huge influx, and I'm forgetting the name of the agent that wrote the book, and this kills me, but there was a book that came out, Short-Term Rental, Long-Term Wealth. Avery Carl is her name, and that led to an explosion because Bigger Pockets syndicated that book, and I'm sure you guys know Bigger Pockets is the biggest real
Yeah.
estate education company in the business. And then because of that, you had a lot of lenders that came into the space as well to service all of these investors that are now interested in the short-term rental market. So
Mm,
we saw this explosion happen. And then what ended up happening from that is naturally, if more people are getting into the space, that suppresses the revenue potential because you have more supply. It's natural economics, right?
right.
And so some lenders got caught with their shirts off. And unfortunately, like we saw in the middle of two deals that we were doing, because of lenders that were closing up shop, the lenders, before we could get to the finish line of closing the deal, changed the requirements of higher down payment, which blew my mind that that was even a thing. But a lot of turmoil was happening a couple months ago in the real estate industry. So we came out unscathed, thankfully, because I can't say that for some of my colleagues that I know they're in the space, but it just goes back to being really stringent on your deals and not just taking any deal that crosses your face, because you could end up in a bad place for sure.
Yeah, absolutely.
So with vacation rentals in general, like people are super excited to have them. Like the added benefit of being able to go to them is huge. And like because humans are naturally wired to have like that instant gratification, how do you address some of those conversations with like your potential like investors to be like, hey, like we can't move forward with this deal, but there will be another one? Like, how do you kind of change it from the scarcity mindset to the abundance mindset?
My thing is just setting the right expectations up front. So to your point, Susie, if you're in this for the long term, then that has to be your mindset, right? We honestly don't want to work with people who are short-term focused, looking for the next shiny thing. So we want to have an audience and members that work with us who see the long-term potential of real estate, because it's not as hard of a conversation. If I'm talking to somebody that knows, hey, I'm doing this for the next 20 years, it's a lot easier than somebody who's trying to buy a car in the next 2 months. That's not necessarily an investor we want to work with. So we try to find those people who have a long-term mindset, and it makes it easier if something goes wrong. Then we can reset and ensure that we're trying to make it right going forward.
Well, I'll jump in here too, and maybe just to, I don't want to correct Jimmy or anything, but I will say that we love, there are folks in the real estate game who have short-term mindset. It's basically the fix and flips. Like there's nothing wrong with the fix and flips and wanting to kind of get a quick return. We absolutely work with those types of folks as well on our platform, because we do have a liquidation market where you can basically list your shares. And so you can buy in the pre-rehab phase really early when the house looks like abandoned and looks like it had 10 dogs in there and looks like a bear living in the downstairs bedroom or something. And they like to be a part of the project and then leave after, basically exit after the rehab has happened. But that being said, I think one thing we really try to speak to, we really try to partner with our investors. So we really try to understand what their mindset is. Why does this deal have to happen right now? Why is it that you love this property? What is it that, is it more of this property, or is it more you have to do this right now before you go on your big vacation? Or is it something else? I think the understanding of the why is super important to understand the investors feeling one particular way or another. But there's always a better opportunity out there. There's always a great deal. And you should not, if there is some risks involved, if the property's not quite meeting expectations, or maybe the property's a little bit risky and that has aluminum wiring, which is a fire hazard, or it has cast iron steel, which is that can break and you have to rip up all the floorboards to fix. Like you don't want to be in that situation down the road. So I think the outcomes is also really helpful kind of tool to use for folks.
Absolutely.
Yeah, that makes a lot of sense. When you say, though, you have like investors who kind of want to do that short term, how does that work then with your strategy? Like, if it's to be able to provide a vacation home for people, like, do they still have that ability?
Oh yeah. I
Uh,
mean, there's a specific strategy, and we can give you an example. So I can let Brian talk to the example, but the strategy is BRRRR. So for the audience that's not familiar, it's buy, rehab, rent, refinance, repeat. And you can have the best of both worlds, where you find off-market properties that need a little bit of touching up. And then when you flip it into a short-term rental on the back end, once you refinance, you can take out some of the cash proceeds to go get the next property. So we've done that strategy, and that's what Brian was alluding to. But we have a particular property that went really well. So I'll let Brian talk to the example here.
Yeah, I mean, there's a few different ways. So we don't just go out and buy the property. There's actually quite a few ways to onboard houses on our platform, like buying the house outright with investors. Right. Another way is we'll actually go and folks will actually just want to onboard their properties to our platform, which is an interesting experience. So that's where the process where actually someone already has an Airbnb, maybe they're really sick of talking to guests every weekend, or they don't really, maybe they put a little bit too much in and they want their cash out, but they still really like the home. They want to keep 60, 70% of it. So they actually onboard their house on our platform and then fractionalize the rest of it for our user base. So I just want to call that out as another approach. So there's a few different kind of avenues we take to onboard a property, but for the BRRRR strategy specifically, that was a really fun. The one that last we did was Gatlinburg, Tennessee. If you guys haven't been there, it's a beautiful location, really nice, just a beautiful, gorgeous area in Tennessee. And so that was a property that looked like an abandoned house. And I think I don't want to quote the numbers, but it was like in the 300s-400s when we got it. We did a full renovation on it. It's now a four bedroom with a hot tub, like a private backyard, a game room. And now for context, the house next to it is valued at 1.2 million. So we captured quite a bit of value into that property. And we think that's a great strategy of, again, back to this being risk adverse. If you do a really good rehab project, you're just going to be much more risk adverse than if you just bought a turnkey property.
Totally. Yeah. And that goes the same with multifamily or office space or just real estate in general.
Absolutely. I have a question. I don't remember who mentioned it, like was it Brian or Jimmy, but you said if you don't know what you're doing on Airbnb or whatever short-term rental platform you use, like you can actually end up losing your shirt if you don't know. What I'm seeing recently, and maybe this is just me, my observation, or whatever, but like what I'm seeing recently is like an Airbnb. There's been a flood of people like wanting to Airbnb their property, right? So like you have like Charles who has like a dingy basement room who wants to rent it out and then tries to like make it all look special and everything like that. But it's just there's not an experience there, right? And then
Right.
but with that, like there's more and more of those people coming online, and then you have like more and more not great experiences with short-term rentals. So I think what I'm seeing, and maybe correct me if I'm wrong, but like Airbnb is doing a push towards like back to their roots, right? So their roots was like these amazing houses, these really incredible experiences. Like
Mhm.
they have, when you go to their landing page now, when you type in Airbnb, it goes to like the OMG, like little thing where they have like these incredible houses that you can rent. Are you seeing that as well? And if you are, like, how are you tailoring your Airbnb experiences to match what is trending now, I guess, in the short-term rental space?
Yeah, and I'm gonna let Brian give us the nuts and bolts because this is his wheelhouse. But we have an overall framework that we use that I'm sure could help your audience as well in terms of great properties. So we look at geo because the location matter. Just because you're in Orlando, regulations for the R is another big one. Economics, so like we talked about earlier, Susie, do the numbers make sense?
Yeah.
Amenities, which is what Brian's gonna go deep on to your point, because it's not a list and they will come strategy. You gotta actually have an experience behind your properties. And then timing for T is the last one. How long is this going to take? Is it better to do a spectrum? Because when we started, we unfortunately did not have that framework. And so we made some mistakes that we had to correct on the back end. So utilizing all 5 of those pieces gets you to a better place. But amenities is the most important one. And Brian, again, that's his wheelhouse. So I'm gonna let Brian speak to how we make sure that we have our
Yeah, we have
properties
the
fine.
acronym greatest. There's our keyword way of analyzing these properties. So that's a good call out, Jimmy. Yeah, I mean, we try to make them really fun. So I think one thing to call out specifically is someone's renting on vacation, they're going on experience. Do you want kind of like the same thing that you would get at a normal house? Probably not. You probably want something really different. Like for example, our last property we onboarded in Tampa, we started out and we're kind of looking like, oh, we kind of saw the pictures that they had kind of done renderings of what the property would look like. And we're like, wow, it's kind of nice, but it's kind of boring. And so what we did is we did kind of flipped it on his head and we did a really light blue Tahitian vibe with like a pool. And so we kind of went for like this Tahitian beach house vibe. So it was something really kind of unique that you just like, you probably wouldn't want in your house, to be honest. It would be like, okay, I'm not in Tahiti. I probably don't need a Tahitian beach house. But because it's a unique experience, it really resonates so much more with the end user, with the guest. And then another thing to note is we try to do some fun stuff. Like for one of our Las Vegas property, which I'm currently in right now, we actually have a secret speakeasy room behind a hidden door. And so we give guests like a riddle how to get in. It's very simple. It's just like a door that you slide, but it opens up to the speakeasy and we'll show you where it is. But basically, so it's like this whole, and then it's a whole different vibe in that room where it's a green poker room and there's like a little bar and like a television lounge area. And that's just a fun experience. I think people are like, wow, they'll tell your friends about this experience. Like, oh yeah, it's a great property. You had to speak to me. So like, you don't really have that kind of experience in a typical home.
That's cool.
Yes.
I like that a lot. Thanks for explaining that because I did not expect that at all.
Yeah, so that's what we look
That's what we're
forward
here
to.
for.
Yeah. So we look forward to, like when we're looking at short-term rentals, like we're exhausted of short-term rentals and like staying in them. We're like, we're going to go back to, because like the experience wasn't there, what we were finding and stuff like that, especially over in
Mhm.
Europe right now. Like, so we've gone back to like the hotels, like just because simplicity and the amenities and things like that. But like we will stay in like Airbnbs where the experience is there for sure. But thank you so much, guys. We are moving towards the end of the show, which brings us to the Adventurous 4. These are 4 exploratory questions we ask all of our guests. So however you guys want to do it, you can alternate or you both can answer. It doesn't matter to me. But the first question we have for you both is, where is one place you wish to travel to and why?
I'll go first. I want to go to Mars. I would like to, but
Hilarious.
seasons wise, it's a unique place to go. And that I don't think too many people, so it'd be a fun experience. Not anytime soon, but like maybe like when old and like they figured it out.
Right?
Love it.
And if you guys couldn't tell from my background, I'm an island guy. So the next island I need to conquer is Fiji. That's where I want to travel to next.
Very cool.
That's awesome.
I like it.
Love it.
So, what is one thing on your bucket list, and how are you leveraging real estate investing to achieve it?
Yeah, so I'll go first. Again, not to monopolize it, but I think there's a huge opportunity in construction automation. Specifically, every house that you're in right now is actually it's basically built by hand, which is kind of odd, right? Like most things, and a lot of things are just mass produced, or maybe like they're produced by machines, or there's a lot of automation involved. And I think in general, that's where society is heading. That we're more towards automation, just across the board. And I think there's a huge opportunity to really basically enable more people to own real estate by lowering the cost of making housing, making it more affordable for folks. And I think cloud castle is actually our stepping stone. Right now we do vacation properties, but soon we want to expand to much larger things and eventually do more home automation. We're able to really bring super cool houses or super cool living facilities to folks at a much cheaper rate because of automation.
Yeah, my bucket list is owning restaurants that I love frequenting. So one of the things that Brian and I have talked about is expanding cloud castles beyond short-term rentals to any asset that you can also use,
Yeah.
also use. So you think about clubs, lounges, restaurants, they all fall into real estate. And it would be a cool feature not only to have that on our platform, but also to say STK is one of my favorite steakhouses. To say I own an STK and I can just walk in and I get free steak every time I go. So that's a bucket list that I can capture with Cloud Castles as we keep building out the business.
Love it.
I do too.
That's cool. So the third question is, what is one piece of advice you have for someone who wants to start passively investing in real estate?
If they want to do vacation homes, I'd love to talk to them. I think they should talk to us. If they want to do general real estate, I would say the advice I can give is you don't have to DIY. That's very painful. It's not build the whole house or like renovate the whole house yourself, but you should the unit economics for everything. For example, like if you're like buying like an irrigation system or you're repaving something, you should have a pretty firm understanding of the actual cost of the materials, the raw materials. And from there, you can estimate if the labor cost is appropriate. So like if it's 100x or 25x higher for labor than it is for the materials, like it depends on the job, of course, but that's like a rule of thumb that you're probably not getting the best deal. Well, it's like 1-to-1 or something where like, okay, well, it costs as much, basically half labor or something. That's like a better prospect than just paying a ton for labor. Obviously, it depends on the project, but I basically just have as much information as possible and really know the ins and outs of how everything actual renovation spot.
Yeah, and again, shameless plug for Cloud Castles if you want to passively invest. But even if you're not working with us, the overarching thing for passive investing for me is find a mentor because you can learn so much by giving your money to somebody that knows what they're doing and watching what they do. So that if you ever want to do it on your own, then great. You at least learn the tools of the trade rather than making your own mistakes. So you can use us as a mentor. We've had plenty of investors come to us and say, "Hey, I want to invest with you guys, learn everything, go do this on my own." No
Mhm.
problem. We're all in it together. It's a $1 trillion real estate market, so there's more than enough to go around. But even having said that, if it's not us, find somebody that knows what they're doing and learn through them.
That's awesome. And then the fourth and final question is, if you had unlimited resources available to you, how would you leave an impact?
I'd be doing the same thing I'm doing now, just probably at a bigger scale if we had unlimited resources. But yeah, I think like, having a home is just so fundamental to the human experience. I think it's such a good reflection of a person, and I think it's so important. Like it's so valuable to people, and I think everyone should have the opportunity to own as well as expand their real estate portfolio.
Yeah, to that same point, I would find the biggest megaphone to spread the gospel of owning versus renting, right? The unfortunate truth is not everyone has the money to really get out of the rat race and start building passive income to have a lifestyle that they call their own versus working for somebody else. But if more and more companies like us exist and people find more and more ways to get in the game of wealth building, that would be what my ultimate goal out of not just Cloud Castles, but leaving a legacy is just to make sure everybody feels feels empowered that you can own and build your own future off of owning assets versus just renting them.
Love it.
Yeah, thank you for that.
That's cool. Well, thank you guys so much for joining us. Before we end the show, would you mind sharing with our listeners how they can reach out to you guys?
We have a lot of different ways. Cloudcastles.io is our website. Same handle for Instagram and Facebook at cloudcastles.io. If you want to reach out to either of us personally, then my email is jimmy@cloudcastles.io. So we love taking calls and talking to investors and just helping out in general. So feel free to reach out.
Love it.
Yeah, well, thank you, Jimmy and Brian, for joining us. It has been a pleasure. And please reach out to them if you are interested in something like this, because like great operators are also very hard to come by. And so just see what they like are up to, see if your values align with theirs, because you can always find great success with real estate.
Absolutely.
Thank you
Well,
so
thank you
much
guys.
for having us, guys.
Yeah.
Absolutely. Thank you. It's been an absolute pleasure. So until next time, explore more, adventure awaits.
Woo!